Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Reviva Pharmaceuticals.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, let's start with what everyone knows this company for, Brilloxazine. For a long time, this was, a classic single-asset biotech story.
It absolutely was. And that molecule, RP5063, is still the primary value driver. It's targeting these huge central nervous system markets.
What's schizophrenia?
Exactly. And management is being pretty clear about the timeline on that front.
What are they guiding for?
They're targeting a formal regulatory submission, the NDA, in the second quarter of 2026.
Okay, so Q2 2026 for the new drug application. For anyone new to this, that's basically the final step before the FDA decides to approve a drug for market.
Right. Hitting that target is a huge signal that they're executing.
But that's still a ways off. There's something much sooner, a really critical event coming up.
You're talking about the FDA meeting.
Yeah, the one planned for the fourth quarter of 2025. Why is that single meeting getting so much attention?
Because it's the biggest de-risking event you can have short of an actual approval.
How so?
Well, a company this late in development needs to be perfectly aligned with the FDA on what's required for approval. The data, the endpoints.
So they're basically asking the FDA, if we give you this, are we good to go?
That's a great way to put it. If they walk out of that meeting with a clear, agreed-upon path, the market sees that as a massive reduction in uncertainty.
It takes the drudge from being just a possibility to, a near-term reality.
Exactly. It's all about clarity.
Okay, so that's the process. What about the drug itself? Schizophrenia is a crowded space. What's Brilloxazine's advantage?
It comes down to two things, really. The competitive moat and the safety.
Let's start with the moat.
They've got broad composition of matter patents. So think US, Europe, China, Japan, all the big markets are locked in. But the clinical side is the real story.
The safety profile.
Yeah. The old antipsychotics are just notorious for side effects.
Weight gain, the movement issues, all that stuff.
Right. Which leads to, huge numbers of patients just stopping the therapy.
And if they stop taking it, the drug isn't doing any good.
That's precisely. The data Reviva has reported shows a 35% discontinuation rate after 1 year.
Which might still sound high.
It does in a vacuum, but compare it to legacy drugs where that rate can be 50, 60, even 70%. A drug that keeps patients on therapy longer is just commercially stickier. It's a huge deal.
That makes sense. I remember earlier in 2024, before these timelines were set, analysts were fixated on the phase 3 trial data.
BRL 301, yeah.
And there was this sort of whisper number of a 2.5-point reduction on the PANSS score. Can you break that down for us?
Sure. PANSS is the gold standard for measuring symptom severity in schizophrenia. That 2.5-point reduction versus placebo is like the unofficial bar you have to clear.
So anything less might not be seen as clinically meaningful, even if it's statistically significant.
You've got it. It shows how high the bar is in this field, which, explains both the risk and the potential reward here.
And this drug isn't a one-trick pony. It's a platform.
It is. They're also developing it for pulmonary arterial hypertension, idiopathic pulmonary fibrosis, or IPF, and even psoriasis.
The IPF indication is interesting because of the regulatory status.
The orphan drug designation from July 2024, that's incredibly valuable.
Why is that?
It gives them a potential 7 years of market exclusivity in the U.S., completely separate from their patents, plus, extra regulatory support from the FDA. It's a smart strategy.
Okay, so we've got this massive CNS opportunity, but the story's changing. The company isn't just about clinical promise anymore. They're actually selling a product.
And that's the pivot. This is what changes the whole investment case from a pure binary bet to something more.
Right, the commercial revenue. First quarter of 2025, they hit $1.87 million.
Which is small, sure, but it was a nearly 17% sequential increase. That's real growth.
And it all comes from one product, Vivy.
Yeah, they're recombinant human hyaluronidase. But it's not just the revenue that's impressive, it's the margins.
They are kind of shocking. Gross margin expanded to almost 75% in Q1 2025.
Up from 62% the year before. That's huge.
How are they getting margins like that so early?
It's a manufacturing advantage. They have a patented process, something called pharmacoengineering.
And that does what?
It lets them produce Vivy at, get this, less than 1/3 the cost of the older bovine-derived alternatives.
So when you have that kind of cost advantage, you can scale while keeping margins incredibly high.
Yeah.
That's a powerful engine to fund R&D.
It's transformative. It's not just a product. It's a technology moat.
But for now, Vivy is their only commercial product.
Yeah.
So let's look at what's next in the pipeline. RVX 212.
Their second big shot on goal. This one's for dermatology.
Right, a TNF-alpha inhibitor for psoriasis. And it just got FDA Fast Track status in June 2025.
Which is another strong signal from the FDA. It basically says they see this as addressing an unmet need.
And it sets them up for a potential BLA submission in the second half of 2026.
A BLA for biologics, yeah. And notice the timing. That's right around the same time as the NDA for Brilloxazine.
2 major regulatory milestones hitting at roughly the same time. That's a powerful setup. But what's the tech here? What makes RVX 212 special?
It's all about the delivery. It uses their conjugated delivery technology.
Okay.
So think about psoriasis drugs. Many of the best ones are systemic. You inject them, they go through your whole body.
Which can cause all sorts of other side effects. You're trading one problem for another.
Exactly. This technology lets them apply it topically, right on the skin, and it achieves 94% tissue retention.
Meaning the drug stays where you put it.
Right. You get the local effect without the systemic exposure. That's a massive clinical differentiator.
So we have the huge CNS drug, a growing and very profitable commercial product, and now a fast-track dermatology asset. This feels like a good time to check in on the financials. How's the balance sheet?
It's solid. As of the end of March 2025, they had $44.6 million in cash and equivalents.
And the really important part.
0 long-term debt. A very clean capital structure, which gives them a ton of flexibility.
But they are still a company in development. They're burning cash.
They are, but the trajectory is improving. The net loss is narrowing, and free cash flow burn was down 22% year over year.
And management has a target for that, right?
They do. They're targeting free cash flow break-even by the fourth quarter of 2026.
But that's contingent on hitting over $12 million in annual revenue.
Correct.
Okay, let's do some quick math here. If they have $44 million in cash and the quarterly burn is, let's say, around $8 million, that gives them a cash runway that ends somewhere in Q3 2026.
That's a sharp observation.
That's right before the break-even target and the big NDA submissions. That seems tight.
It is tight, and it puts an incredible amount of pressure on that Q4 2025 FDA meeting. A positive outcome there is what they'll need to see to secure the next round of capital on good terms.
Speaking of capital, we have to mention the recent equity offerings, the $9 million and $5 million raises.
Necessary evils, you could call them. They had to fortify the balance sheet to give themselves this runway through these critical milestones.
Okay, let's shift gears to sentiment. The stock chart has been looking better. It formed a golden cross back in January.
It did. And for listeners, a golden cross is just a technical signal where the short-term moving average crosses above the long-term one. It often suggests a more durable upward trend could be starting.
So the chart is looking bullish. What about the insiders?
That's an even stronger signal, I think. You had 5 different insiders making direct open market purchases. Not options, but buying shares with their own cash.
Over 86,000 shares. That's not trivial.
No, it's a loud vote of confidence. And the big money is following.
The institutions?
Yeah. Institutional ownership jumped from around 12% to over 28% in just the first quarter of 2025. When you see major funds like D.E. Shaw building positions, they're clearly seeing that transition we're talking about.
But let's not get carried away. We have to talk about the risks. This is still a high-risk story.
Oh, absolutely. The number one risk is, and always will be, clinical execution.
It's still a binary outcome for Brilloxazine.
For the most part, yes. So much of the company's potential valuation is tied to that drug. If there's a major setback at that FDA meeting or with the NDA, it would be a huge blow to the thesis.
Risk number 2, revenue concentration.
100% of their current revenue is from Vivy. So any problem there, supply chain, competition, it would immediately hit their bottom line and that break-even target.
And the third risk, we already touched on it, the cash burn.
The runway. It ends Q3 2026. They will need more capital. But this is where RVX 212, that dermatology asset, could be a game changer.
Because of the partnership potential. I've seen analysts float numbers like $300 million or more in an upfront payment for a deal.
It's highly plausible. A big pharma company would pay a premium for a de-risked, fast-track dermatology asset with that kind of unique delivery tech.
And a $300 million non-dilutive payment would. Well, it would solve the cash runway problem overnight.
Completely. And it would let them fund the Brilloxazine launch without having to go back to the market and dilute shareholders.
So what should people be watching for over the next, say, 3 months?
Okay, the immediate calendar. First up is Q2 earnings, probably around August 12th. The street is looking for about $2.14 million in revenue.
Beating that would keep the Vivy growth story alive.
For sure. Then in September, management is presenting some early phase 1 data for another asset, RVX-208 for NASH.
That's a tough field, Nash.
Very tough. But positive data just adds another layer of optionality to their platform.
And then the last one for the near term.
We should get FDA feedback on the manufacturing, the CMC, for RBX-212 around September 18th.
And why is that important?
Favorable feedback there could actually speed up the BLA filing timeline. If they can pull that 2026 date forward, it increases the pressure on them to do a partnership deal even sooner.
It all really comes together to paint a picture of a company at an inflection point. The valuation seems to reflect that.
It does. It's what you'd call an option-like setup. It's trading at a discount to its peers, around 2.9 times 2025 sales estimates versus almost 5 for the peer group.
And that discount is basically the market pricing in the regulatory risk for Brilloxazine.
Exactly. So if they can successfully navigate that Q4 FDA meeting, you'd expect that valuation gap to close, and the potential gains from that re-rating could be significant.
What's fascinating here is that we aren't just looking at a single asset biotech anymore. We have Brilloxazine driving the massive CNS opportunity. But we also have a growing commercial stream with Vivy and the high-margin, fast-track dermatology asset RVX-212. This shift from pure speculation to multiple shots on goal with real revenue traction is what defines the transition phase. This story is clearly for investors with a 12 to 24-month time horizon who are willing to underwrite that regulatory risk ahead of the FDA meeting, aiming to capitalize on the moment the clinical story translates into an official regulatory pathway.
We look forward to tracking this one. Don't forget to subscribe, like, and comment to catch all our stock talks right here on Smart Wealth with Joshua.